So Gerry Cardinale is out here trying to build a $111 billion media empire, and I'm supposed to pretend that's a normal Tuesday.
It's not even the size that gets me. It's the math. 12 billion in EBITDA, climbing to 18 once they slash 6 billion in costs. That's a lot of synergies that used to be people's jobs.
Okay, but if it closes, this thing reshapes streaming overnight.
If it closes, Nate.
Fair big if, the rundown. Okay, so BioNTech just swallowed CureVac whole. Done, final. CureVac shares are gone, converted into BioNTech stock as of January 7th.
Which is wild because CureVac spent years being positioned as the scrappy mRNA rival. Now it just ceases to exist as an independent company.
Consolidation finds everyone eventually.
Cold, but accurate.
Moving on, this one caught me off guard. 2.0 Group dropped roughly $190 million for a 60.8% stake in ISEM Packaging Group out of Italy. They're calling it AI-driven expansion.
They're calling it AI-driven because everything is AI-driven now.
To be fair, packaging logistics is genuinely a space where automation makes sense.
I'll believe it when I see the margin improvement. Until then, it's a press release.
Fair. Meanwhile, in the wait really category, quantum computing acquired a company called NuCrypt for $5 million.
5 million? That's not an acquisition. That's a rounding error.
And right next to it, USA Rare Earth is doing a $73 million all-stock deal for Texas Mineral Resources. So you've got the quantum play going cheap and the rare earth play going all paper. Different risk appetites entirely.
The rare earth one actually makes strategic sense given where critical minerals are heading. The quantum one I'd want to understand a lot better before I got excited.
Noted. Skeptic on record.
Always. Okay, CBL Properties bought Gateway Mall in Lincoln, Nebraska for $43.5 million from Washington Prime Group and simultaneously sold an open-air center. Capital recycling, clean swap.
Boring but competent. That's honestly my favorite kind of deal.
Now you sound like a CFO.
I've been called worse.
And then there's Octopus Energy in Australia, acquiring a 1.2 gigawatt battery storage project in New South Wales, largest planned battery project in the country.
That's enormous. And industry watchers are saying renewable projects without integrated storage are going to struggle to raise money in 2026. So Octopus just bought a very strategic asset at a very strategic moment.
Speaking of strategic and enormous, we should probably talk about the thing that makes everything else look small.
Paramount eating Warner Brothers. Yeah, let's go there. The big one. So Gerry Cardinale is either the smartest guy in the room or he's completely lost his mind.
Probably both. $111 billion, Nate, for a combined entity that doesn't exist yet.
And here's the thing. On paper, the math actually works. You're looking at nearly $12 billion in EBITDA before they touch a single cost. That's a real number.
It's a real number now. The bet is that it becomes an $18 billion number after they squeeze out $6 billion in cuts.
$6 billion. That's not a synergy estimate. That's a demolition plan.
Right. And that's where I want to pump the brakes a little. Because $6 billion in cost cuts in media means one thing. You know what it means.
Layoffs, content write-downs, probably killing 3 streaming apps and calling it streamlining the portfolio.
And 2 prestige drama series that someone at a conference last year called the future of storytelling.
Gone, just absolutely gone. Moment the ink dries.
So here's my actual question. Who wins here? Because I don't think it's consumers.
Okay, I'll push back on that. The winner is whoever survives the streaming war. Right now, you've got Paramount Plus hemorrhaging money, Warner's Max trying to find its identity, though combining them creates something that can actually compete with Netflix at scale.
Or it creates a debt-laden mega studio that spends 5 years integrating 2 completely different cultures and comes out the other side with worse content than either had separately.
The AOL Time Warner callback, I was waiting for it.
I didn't even say it. You said it.
I said it so you didn't have to. You're welcome.
But seriously, Cardinale is not a media operator. RedBird is a private equity shop with sports assets and a vision board. What's the actual operating thesis here?
Scale and leverage. You get big enough, you set the licensing terms, You stop being a content vendor and start being infrastructure.
That's a compelling story. It's also exactly what every banker says when they need to justify a premium.
I mean, I used to say it with a straight face.
And that should terrify everyone in this deal.
Little bit, yeah.
If this closes, the streaming map looks completely different by 2027. Every other player has to respond. Disney, Comcast, everyone.
Which actually brings us to something else moving in the background right now. Some stocks are doing very interesting things without anyone officially confirming anything. Voices. Okay, so UBS called the Accenture Ookla deal timely and strategically savvy, which respectfully is exactly what UBS says about every deal their client is doing.
To be fair, it's not wrong. Ookla sits on a mountain of network performance data. If you're trying to build AI-driven network intelligence, that's actually a real asset.
Sure, but timely and strategically savvy could describe me buying an umbrella when it's already raining. It's not exactly a bold call.
Fair. Now here's the one I actually found interesting. There are industry observers flagging that Australian renewable projects without integrated battery storage are going to struggle to attract investment in 2026.
And then Octopus Energy goes and buys a 1.2 gigawatt battery storage project in New South Wales, like the largest planned battery project in the country.
Which is either genius timing or they've been reading the same research notes everyone else has.
Probably both. That's how good deals work.
Okay, but the one that genuinely surprised me, Diligence Squared raised $5 million to automate due diligence with AI voice agents. And then Dealflow Agent raised $750,000 to build an AI-native investment bank for SME deals.
Wait, AI is now doing the thing that bankers do to justify their fees?
Apparently.
I spent a decade in that business. I have complicated feelings about this.
I don't. I think it's fascinating. The deal process is getting disrupted from the inside out. That's a real story.
It is, and honestly, if AI can automate the pitch deck, maybe I got out at the right time.
You absolutely did. Speaking of deals that are anything but automated, let's talk about the one where Gerry Cardinale is trying to merge two struggling giants into one very expensive problem. Spill the tea.
Okay, so can we talk about the fact that 3 different stocks just mooned this week on rumors that nobody will confirm?
Rome, UniFirst, Day One Biotech, zero official statements, maximum shareholder chaos.
Denso reportedly threw a 1.3 trillion yen offer at Rome, which for the math averse, that is a serious number. And Denso's response is basically a shrug emoji.
A corporate shrug. Classic. And UniFirst is just sitting there watching Cintas circle it like a shark, also saying nothing.
Meanwhile, Day One Biopharmaceuticals doesn't even have a name suitor. Someone just started whispering takeover into the void, and the stock responded.
That's my favorite kind of rumor. The nobody knows anything but let's all freak out variety.
I kind of respect it, honestly.
I don't. Those shareholders are going to have a bad time when the denial drops.
See, I think the Denso Rome one is real. The numbers are too specific to be pure speculation.
Nate, every leaked rumor has specific numbers. That's what makes it feel real. That's the whole trick.
Okay, fair point, former journalist.
The one I'd actually watch is UniFirst. Cintas has been consolidating the uniform space for years. This fits their playbook perfectly.
That's a very boring sentence about a very boring industry that is somehow very interesting to me right now.
Uniform M&A is genuinely underrated drama.
3 rumors, 0 confirmations, and enough shareholder excitement to last a week. Corporate theater doesn't get much better than this.
And if any of those get a formal filing, we'll be back on it immediately. Speaking of things that are definitely happening, let's get into the deal that is actually confirmed, very large, and kind of insane. Tomorrow's radar. Okay, before we wrap, what are you watching tomorrow?
Nuveen's fund merger. BXMX and DIX folding into SPXX goes effective before market open March 30th. Quiet on the surface, but if there's a last-minute shareholder snag, that gets loud fast.
That one's actually on my list too. Also watching Sotera Health. The Warburg Pincus and GTCR secondary was $381.75 million. Should have closed March 6th. Confirmation and float reaction could still ripple through.
And obviously Quinta's UniFirst, Denso Rome. Either of those gets a formal filing.
They go from gossip to front page overnight. Yeah.
Rome's stock surged on a 1.3 trillion yen offer that nobody's confirmed. Nobody. That's insane.
3 stocks, 0 confirmed deals. Shareholders just out here manifesting.
I mean, it's working.
For now, speaking of things that might actually be real, we need to talk about the $111 billion elephant in the room.